Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. In today's lesson, to start the show, I want to spend a few minutes going into more detail on MACD. Most people look at MACD as a trend and momentum indicator, and it's great for that. I use it for that all the time, but I think you also want to understand that it is an overbought, oversold oscillator. So I want to go into a little bit more detail about that and how it can show you when it's flipping from being an oscillator to being a trend indicator, and why those areas are the best areas to put trades on. So as we get into the agenda, I want to talk about the location using MACD. So if I'm trying to find a trade location, MACD is very helpful from that standpoint. And then I also want to discuss the zero line, which is really the location that I'm talking about. But there are some key signals that can take place around that area. And so I'm going to go into that as well. So let's go ahead and get into this lesson. So I've got a daily chart of the SPY up, and I've got my two moving averages. I use an 18 and a 40 simple moving average. And then I've got the MACD down below in the first scale. And what I want to show here is that we've got this zero line. So let me just highlight the zero line for a second. And that line is, I think, really important when it comes to referencing where we want to be a buyer or a seller. And when we define MACD, the black line is the MACD line itself, and that's showing the difference between the 12 and the 26 exponential moving averages. And then the red line is a signal line, which is a 9-period exponential moving average of the black line. And so when those lines cross over, we see the histogram. So if it crosses over to the upside, then the histogram goes positive above zero. All right. And then when the MACD line crosses down below the signal line, we see the histogram go below zero. Now, if you use that as a center line, all right. Now, so think about it this way. We've got an oversold condition here, and we've got an overbought condition here. And essentially, the oscillator or the histogram is giving us the same sort of reading. So we know this, if we're using the same scale, we know that this midpoint here is kind of like the center line. It's probably a better word for this rather than zero line. So the center line is showing where you're kind of going from an overbought condition down, and then determining at this point near the zero line, are you actually flipping the trend to negative, or are you turning back up to the upside and starting a new leg in the ongoing trend? So what I have found is that if you can focus in on this zero line and look and understand when you're far away from it, you should be looking for reversion back to the mean, just like these are, just like this is, right? And just like this was, and the same that's happening right now. We got too far away, and we've been working our way back down towards the zero line. So you want to recognize that as an overbought, oversold oscillator. Now, every single stock and market is a little different. So you don't really have a specific number. You have to go back in time and say, okay, for the SPY, it's up over 5, 6, 7, something like that. But for an individual stock, it could be different. Now, the PPO might help with that. If you use PPO, I think you can probably find it be a little bit more consistent on the overbought, oversold. But I got to tell you, I don't use PPO. I mean, I know it's a powerful indicator. It's really pretty much the same as MACD. But at the same time, I just don't change what I'm doing when I know what I'm looking at. I just stick with it. So, but let's just focus in on this signal here, and this signal here real quick. We've got an overbought condition. And then the price breaks down through the 18 MA. This is the 18 MA. And if you notice what happens, we actually fail at that 18 MA and turn down. So we're getting somewhat of a trend going in price. And that is taking place right as the MACD is crossing down through the zero line. Okay. And now if we if we look at what happened, we had a move and we got stretched away from the zero line, and then we rally up. Now, at this point in time during this period, we don't know for sure whether this is just a rally and it's going to go back down, or whether it's a reversal in the trend. But we know as we work our way back up towards the zero line, we want to be watching this area really closely. If you notice, it fails right at the 40 on this daily chart, and then ends up breaking down below this consolidation zone and starting another leg to the downside. So again, we have a good trade location to be on the lookout for. Is this breaking out or is this breaking down? So we're kind of looking there. And then thirdly, after the trend reverses to the upside and we're coming back and pulling back to the 18, which is now rising, we see that both lines are crossing back above the signal line and above the zero line, and we have a little pullback towards the 18 right as this is crossing back above. So this is actually the inverse signal of what took place here. We had this going to the downside, this going to the upside, and then in between, we had a failure at the zero line. I'm telling you, you just keep an eye out, and this happens in every single time frame. I've done this on a 1-minute chart, and I've done it on monthly charts. You can do it at anything in between. It happens repetitively over and over again. Now, the one thing I'll tell you about these zero line failures is sometimes they can overrun a little bit, and sometimes they don't quite make it. They don't always come back and just touch right at the zero line. But just something to be on the lookout, and look at it as an area, not necessarily a specific hardcore level. The area around the zero line when you're crossing above or below, especially when it's confirmed by price action, can be incredibly important to identifying essentially a new trend developing. And that is, I think, the best location to be looking for trades. Now, I know a lot of people like to buy when we cross down and get below the zero line and we're looking for reversals from an oversold condition. To me, that's more of a reversion trade, and we do have divergence. So when we get stretched away, you can look for divergence trades when you're stretched away. There's nothing wrong with doing that. You just have to understand you're going counter trend at that point, because when these lines are going this way and we're well below the zero line, we know the trend is to the downside. So you got to be a little bit more nimble when you're playing that type of pattern. So anyway, I thought this was worthwhile just to give you a really simple way to look at MACD and look for trade locations based on the zero line. Let's go ahead and get into the individual stocks now. Just briefly, you can find my services at rabelstockresearch.com/services. The individual package has 2 to 3 reports each week, plus a special video for that package. If you want to give it a try, you can use a coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the stocks now. Before we get into the analysis, I know I've done 2 back-to-back lessons on MACD. I'm actually planning on doing a third because I want to discuss something I have not spent any time on in any of my videos yet about MACD that I think can be really powerful. So I make sure I tune in for that. Now, there were fewer requests, and one thing I noticed is when the market gets hit kind of hard, there are fewer requests that come through. I only had 1 request outside of the Dow 30. I had a few others that were inside the Dow 30. So what I decided to do this week is do another update on the Dow components. I'm going to go through every single one of them during the course of this review. And obviously not spend as much time as I typically do on each stock, but give you a really good idea of what I'm thinking about for each one. So the one stock that was outside the Dow is this LMT. And, we can see on the monthly chart, we had this nice breakout at 400, and it came back and tested that and held it. I like this pattern overall. What's missing is momentum. We don't have any momentum on the weekly chart. The consolidation is showing that the sellers are pretty low, which is fine, but we haven't ignited a new trend yet, and it hasn't shown up on the daily either. This rally off the low didn't really create any ADX strength off this move. So I'd be inclined to sort of wait for this to get back up through this high, 440, 450, something like that. When we have a low ADX condition, I'm looking for strength to kind of kick things off. So let's start with Apple. I'm going to work my way down and try and do this in the time allotted. So Apple had a really strong move. So one thing I want you to see here is what took place on the daily chart of Apple's ADX. See how the strength we had in this rally? Now, I want you to recognize that as we go through some other stocks, because I'm looking at that, and then I'm looking at the strength on the sell side. And what I'm looking at here is the fact that this move was strong enough that I think it can be defended now. We can make a pretty big drop. I mean, this thing it was at 175. It could come down to 140 and still be above these lows. Okay. And so when we get that big of a move, a strong of a move, I'm more inclined to think that we're going to be in a trading range rather than just fall apart. And we have the 50 week at around 150, 151. I think that's kind of where support is. If we break that, then it could end up being deeper into these lows. Amgen is interesting as well. This is another one with a low ADX condition that I think has just been moving sideways. I want to see this break out through 250 with some emphasis. That really would be the impetus to get things going here. If it doesn't, then I think it just stays in this trading range between 225 and 250. American Express is a concern here. We had a failure at the 18-month line. That line is rolling over. You can see the MACD lines on the monthly kind of turn down and falling, going against price, or pulling it down, working off an overbought condition. But I don't like this failure at the 18 and the 40 week. It really looks like there's going to be some pressure on this one in the near term, and there was some strength here. So we're probably going to get defended down, probably going to see some support down around 140, but I do think it wants to test that area. Boeing it had pretty good strength here, but look at the strength on the sell side. You see the ADX strength, and we've gotten a pretty good rally. I think this wants to come back and test the 18-week line down in the mid-140s. Just too much resistance from the longer-term trend. The 18-month has rolled over. The MACD lines have turned down. It's just going to be a tough road until this forms a little bit more support down here. Now, Caterpillar tried to get through these lows, on this move to the upside, but look at how it hit the 18 and the 40 and is turning down, and it's getting a little bit roughed up here. I think if we come back down through these lows, you have to sort of assume this is failing. And you can see the rally on the monthly chart ran up and hit the 18-month line, which is rolled over and turned down. This is what I saw in my review over the weekend that really troubled me. There were too many stocks failing at their 18-month, which were rolling. I don't think that's a good sign for those individual stocks. And when you look at the Dow, and we're going through a lot of these stocks have the same pattern, I think it's a concern. Salesforce.com is a little disappointing. The thing is that you can see there was no strength in the rally. You see how this was set up to bounce off this support zone on the monthly. We came into pretty good support, and it didn't rally. So the strength of the rally told us this was not really the place they want to be. And I think this is has a long road ahead before it turns things around. Expect this to be a big, like a basing pattern to develop. Cisco rallied up. I'm more inclined to think that this is going to be more of a trading range because there's a lot of support at 40. There's not a lot to hang your hat on here for an upside move beyond 50. I mean, there's so much resistance at 50 that I think we're going to probably stay in a range, but we could undercut these lows and come back down to 40 now. Now, CVX intrigues me because this is a massive breakout on the long-term chart. Has a really good momentum condition based on the ADX, and we're going through this consolidation pattern. Now, what I expect to happen is an ABC pattern, A, B, and a C. It doesn't have to go to a new low to be a C, but we need some kind of a consolidation here, I think, to set it up. And this goes for almost all of energy. Most energy that are strong and breakouts that look like this, I think, are really attractive. I would say, if we can get a pullback that's under control, this is something we want to be looking for. We want to look for some kind of a zero line reversal to develop. I'd love to see this ADX line get a little bit lower while this ADX stays strong and green DI holds. So if it can just go sideways above this prior low, it's a really good shape. Disney got cracked really hard, and it's gotten pretty overdone, and we're now down into this area pretty big support area for it. But the problem is you've done so much damage. The 18-month has rolled over. It's about to break through the 40-month. Can it rally? Yeah, it could possibly try and rally, and it got a pretty good move off the low. That tells me there's probably decent support at 90 or 100. But is it ready to turn to the upside? I don't think so. So I would not get too excited about this. Don't be in a big rush in a stock like this. I think this is going to take a long time. Dow was actually a highlight that I did in my Monday report on the negative side, because we had a rally up into the 18-week line with a pinch play so we had a break of the MACD line and a rally up while this is turning down, and ADX strength here. And then we get the opposing trend where 18 is above the 40 and we break down through. So we've gotten a trigger to the downside. I mean, I think there's some downside risk in this. It possibly down as low as 40 potentially. Now, Goldman Sachs had a powerful move off the low, and we get to JP Morgan. I want you to reference this because look at how strong this actually reached 50 to the upside. So it's created the ability for it to defend itself down here because of such a strong move. Doesn't mean it can't go down with the market right now, but what we're looking for is relative strength. Look at the relative strength line. Go and make sure you're watching these, and if this keeps dropping, does this relative strength line keep ticking up? That's telling you that it's holding up better than the market. We want to be looking for stocks like that. Home Depot failed at the 18-month line. This is showing some weakness here. It's a little bit of a concern, but when I look at it, generally speaking, I kind of think we've got some support down in this area that's still pretty good. I would think somewhere around 260, 270 is pretty good support, but we're probably going to come back down and test that again. Now, if we look at HON, I would say that we've got a pretty strong rally based on the buyers on this line. Really strong move off the low, but we came up into resistance and got hit at the 18-month line. Okay, so we're probably going to be caught in a range right now between 200 and where support would be is somewhere in the area of 170 to 180. But we're trying to distinguish between stocks that have a pretty good chance of maybe going to a new low versus ones that look like they've made a bottom and they can defend themselves on some kind of a pullback. IBM just can't get out of its own way. It can't do anything. It has no momentum on any of the time frames. It's basically just a sideways pattern, and there's really nothing to do unless this can break out above its highs around 140. Intel's even worse because it's just continues to go down on with a lot of strength in the ADX. See how strong this ADX pattern is? And it's confirming the lows. So there's no rush here. Now, we're coming into some pretty good support around 30. So it's, there's a pretty good chance that this is going to stop going down, but that's a far cry from going up. So don't be in a big hurry here. When we're seeing momentum confirmation to the downside based on the seller, see how strong this selling leg is to the downside? Don't be in a big hurry to try and buy a low. Right now, you're trying to avoid taking stupid losses or aggressive losses right now. When the path of least resistance is to the downside, let's wait for a little bit more confirmation. So J&J is breaking the 18-month line, but there is some pretty good support. If I point this out, I would say, down in the low 150s, maybe mid 150s. But I do believe we're coming down to that level. This is another stock that tried to break out and had no momentum whatsoever. So just be careful about stocks that are making new highs, and we're not seeing green DI making new highs with it. Let's look at lost track here, JP Morgan. So remember the Goldman Sachs move and how strong the ADX reading was? See how this couldn't get above 25 on the daily? There was no interest in this stock on this rally. So this recent rally sort of tells us which stocks guys are starting to have an interest in buying when they're down. This is not one of them yet. Okay, we need to see some more strength here. We see strength on the sell side. I don't know that there's a significant amount of downside, but we've got probably decent support around 100. Now, Coca-Cola has been a great relative performer this year. If we look at where it started the year on a relative basis and where it is right now, it's been a good stock on a relative basis. The problem is we've got no momentum in this trend. I mean, it's moving up, but it's doing it in a way that just tells me that the people just aren't all that excited about this. So be careful with this. It's not a bad relative performer for a professional investor to maybe try and hide a little bit right now. But, in terms of trying to make money to the upside, I don't think there's enough power in the trend. McDonald's is kind of in the same boat. We just don't have enough momentum strength here. I think it's a little bit better than Coke, actually, but we got to watch this 250 area. If we don't hold 250, then it turns into a trading range and becomes a waste of time, probably works its way down towards this 230, 240 area. Now, 3M had a nice move off the low, but look at the ferocious selling that came in. We had a huge reading on the sell side down here, and it really looked like maybe it was some kind of a climax, but obviously that's not the case because the sellers are still in control here with a ferocious decline, testing the lows again. No big rush on this. Let this consolidate. Let this form a better base. Merck has been hanging in there, but recently we saw selling take place in Bristol Myers, Pfizer, Merck. All these stocks are taking a little bit of heat right now. I would not be surprised if this wants to work its way down into the lower 80s, but on a bigger picture pattern, this is still in pretty good shape. The sell side so far hasn't been that bad, and actually we have buying strength here. That's different than almost all these other stocks which are showing selling strength, so that's a good sign. Now, Microsoft is at a point where it's trying to fail at the 18-month and starting to roll over. I don't like the MACD look on the monthly. I don't like the fact that it sold off hard enough to re-break the 18-week. There was no strength on the buy side. Apple had really good strength to the upside. This did not. So that's a concern here. It's going to have a hard time defending 250, I think. Nike, again, no strength to the upside. Look at this. There's hardly any strength whatsoever. People are not interested in this yet. This needs to hold 100 to keep itself kind of flat and neutral. If it breaks 100, there's probably more downside risk. Now, if we go back and look at Proctor, and then we think about what we were talking about with the MACD, right? This is come down and failing at these two moving average lines, and we have a MACD breaking the zero line, and it looks like instead of these, which were more like zero line overruns, this is actually looking more like a break, and that we're probably heading back down to test this 130 area or maybe bigger support around 125. Okay, so TRV, not a lot of strength in the upside. The overall pattern is held up really well. I mean, I think there's a decent amount of support at 150. So there's probably a little bit of downside risk in this, but pretty decent support. I don't think this wants to fall apart. Probably be more of a range-bound stock. Now, UNH is one of the few stocks in this list that's been making higher highs and higher lows. I mean, we've got a really nice trend. The trend on the monthly is good, but I don't like what's going on an ADX basis. Look at how this keeps making lower peaks, and on this last peak, we couldn't even get this above 15, the ADX. So I think this is going to come down again and maybe form a range. We have to watch this closely because if there's signs of sellers in the price action and we re-break the moving averages, there could be some risk in this. So it would be one I'd shy away from the buy side, but there's not a lot of choices for a professional investor, but if we break the 40-week, that would be a big concern. Now, Visa is in a point where it's potentially failing at the flattening 18-month line. This is a huge concern. If this comes down through this support area around 185, something like that. I mean, I would not want to own a share of this if it takes out these lows. This is a big concern. They can't get through the zero line on a MACD basis, so it would be a zero line reversal to the downside. Okay, so Verizon is another one of these stocks that they just don't want to own right now. The next support level is around 40, and it might just start to work sideways from there, but there's no rush to be a buyer in this because the strength of the sell side. So if we get a move to the downside like this and there's no momentum, then maybe you want to be a little bit more aggressive. But in this case, we want to let this come down and kind of prove itself when there's selling strength in place. WBA is coming back down to test these lows. It's trying to make this big turn on a long-term chart, but it's coming down to test. And again, there's no sign of buyers on the weekly or the daily, so no rush to be in any kind of a hurry on this. One of the things that I would tell you is when you look at a stock like this, you draw a downtrend line, you've got declining 18 and 40 week, you've got a declining 18 and 40 day, you've got a declining 18 and 40 month. I mean, don't be in a big hurry to jump in a stock like this, even though it's coming into support. Let's look for signs that someone's willing to step in before you. We want to see big money step in before you do. And that's kind of the whole purpose of going through stocks like this. So we can see which ones big money are starting to step in. Most of the ones where that's happening, we're seeing stronger moves off the daily ADX, and that's setting the stage for a little bit more support in place. Last stock, Walmart. Now, Walmart's had some ugly kind of price action, but notice how that was the low on the earnings, and we've gotten a pretty good lift off of that. There hasn't been a lot of down follow through in that last earnings report, which was negative. So I think this has made a bottom with a lot of support at 120. Is there a big rush to be a buyer? Not really. I mean, if you're a professional investor, again, it could be something to be considered because it is improving on a relative basis. But don't be in a big hurry to buy this if you're looking to actually make money. I think there's a huge amount of resistance overhead still in place. So that's the review of the Dow Jones. Thanks for watching the show. My research can be found at rabelstockresearch.com. Also, if you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.